All right, I'm gonna look at Google. Vyvanse, Visine. Visine is not bad for your eyes, no. I do have breakfast coming, so. All right.
Standing by for the Alphabet fourth quarter 2022 earnings conference call. At this time, all participants are in a listen-only mode. After the speaker's presentation, there will be a question and answer session. To ask a question during the session, you will need to press star 11 on your telephone. I would now like to hand the conference over to your speaker today, Jim Friedland, Director of Investor Relations. Please go ahead.
Thank you. Good afternoon, everyone.
7% constant currency growth, pretty bad. Let's see, YouTube down year over year. Oof. I had YouTube returning to growth, but it was not in the cards. 2 down year over years in a row for YouTube. That's a recession that's a decent definition of a recession. If YouTube can't increase revenue, then I don't know. I'll look at TGTX, sure. Google search down year over year as well. They weren't down last quarter, but still very concerning. We're definitely seeing a tech slowdown, or economic slowdown, because our economy is more and more defined by technology. Yeah, I thought that we'd have 10% growth. I thought this was a temporary lull. We went from 24%, 14%, 4%. I thought we'd pick back up to 10. We went down to -2. Oof. How about Cloud? Cloud did better than I thought. Cloud did amazing. Am I looking at the right line? No, I'm not looking at the right line. Okay. Phew. Cloud did okay. Cloud did all right. Not good, not great. I wouldn't worry on the about the Chinese balloon. This is not going to affect your stock portfolio. And if it does affect your stock portfolio, it'll affect all of them equally. So try to focus on one thing. Focus on doing one thing really, really well. Right? Google Network was also down substantially. Just an awful dog poop quarter for Google. Yeah, so you can see with employee growth of 17 to 22%, without commensurate revenue growth, you have a big issue, right? So they had 120,000 employees. Let's do revenue per employee. Kind of an interesting metric, isn't it? Innit. I love that word, the British. Innit. I-N-N-I-T, I think. All right, so 334,000 in revenue per employee per quarter. Keep that in mind. And that was going up, which is kind of amazing. So every employee at Google brings in around 1.2 million in revenue. In it, fam. Woke up this morning. Hey, gabagool. What are the UK government's priorities for financial services reform in 2023? Hell if I know. How would I know, buddy? All these random updates. Woke up this morning. There's my food, hold on.
everyone, and welcome to Alphabet's fourth quarter 2022 earnings conference call. With us today are Sundar Pichai, Philip Schindler, and Ruth Porat. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking, and such statements involve a number of risks and uncertainties that could cause actual results to differ materially. For more information, please refer to the risk factors discussed in our Forms
Trashy is at home. She's doing well. Thank you for asking.
10-K and 10-Q filed with the SEC, including our upcoming Form 10-K filing for the year ended December 31st, 2022. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thank you, Jim, and good afternoon, everyone. It's clear that after a period of significant acceleration in digital spending during the pandemic, the macroeconomic climate has become more challenging. We continue to have an extraordinary business and provide immensely valuable services for people and our partners. For example, during the World Cup final on December 18th, Google Search saw its highest query per second volume of all time. And beyond our advertising business, we have strong momentum in cloud, YouTube subscriptions, and hardware. However, our revenues this quarter were impacted by pullbacks in advertiser spend and the impact of foreign exchange. I'll focus on two major things today in a bit more detail, and then I'll give a shorter than usual quarterly snapshot from across our business. First, how we unlock the incredible opportunities AI enables for consumers, our partners, and for our business. And second, how we focus our investments and make necessary decisions as a company to get there. First, the AI opportunity ahead. AI is the most profound technology we are working on today. Our talented researchers, infrastructure, and technology make us extremely well positioned as AI reaches an inflection point. More than 6 years ago, I first spoke about Google being an AI-first company. Since then, we've been a leader in developing AI. In fact, our Transformers research project and our field-defining paper in 2017, as well as our path-breaking work in diffusion models, are now the basis of many of the generative AI applications you're starting to see today. Translating these kinds of technical leaps into products that help billions of people is what our company has always thrived on. Everyone working on the various projects underway is excited. We'll pursue this work boldly, but with a deep sense of responsibility, with our AI principles and the highest standards of information integrity at the core of all our work. We've been preparing for this moment since early last year, and you're going to see a lot from us in the coming few months across three big areas of opportunity. First, large models. We've published extensively about Lambda and Palm, the industry's largest, most sophisticated model, plus extensive work at DeepMind. In the coming weeks and months, we'll make these language models available, starting with Lambda, so that people can engage directly with them. This will help us continue to get feedback, test and safely improve them. These models are particularly amazing for composing, constructing, and summarizing. They will become even more useful for people as they provide up-to-date, more factual information. And in search, language models like BERT and MUM have improved search results for 4 years now, enabling significant ranking improvements and multimodal search like Google Lens. Very soon, people will be able to interact directly with our newest, most powerful language models as a companion to search in experimental and innovative ways. Stay tuned. Second, we'll provide new tools and APIs for developers, creators, and partners. This will empower them to innovate and build their own applications and discover new possibilities with AI, on top of our language, multimodal, and other AI models. Third, our AI is a powerful enabler for businesses and organizations of all sizes, and we have much more to come here. There's a few flavors of this. Google Cloud is making our technological leadership in AI available to customers via our Cloud AI platform, including infrastructure and tools for developers and data scientists like Vertex AI. We also offer specific AI solutions for sectors like manufacturing, life sciences, and retail, and will continue to roll out more. Workspace users benefit from AI-powered features like Smart Canvas for collaboration and Smart Compose for creation. And we are working to bring large language models to Gmail and Docs. We'll also make available other helpful generative capabilities from coding to design and more. And for our advertising partners, Philip will discuss in detail how AI is powering dramatic campaign improvements and value-adding features for them. Of course, in addition to all this, AI also continues to improve Google's other products dramatically. And we'll continue our work with others outside Google, including joint research collaborations to develop AI responsibly and to apply AI to tackle society's greatest challenges and opportunities. For example, DeepMind's protein database of all 200 million proteins known to science have now been used by 1 million biologists around the world. We continue to invest in AI across the board, and Google AI and DeepMind are integral to a bright AI-first future. Over the past few years, DeepMind has been increasingly working across groups within Google and the other bets. And to reflect that progress, we'll be making a financial reporting change that Ruth will share more about in her comments. We are just at the beginning of our AI journey, and the best is yet to come. The second thing I wanted to discuss is our sharpened focus. We are committed to investing responsibly with great discipline and defining areas where we can operate more cost effectively. We are focused on methodically building financially sustainable, vibrant, growing businesses across Alphabet. For example, we are working to improve the economics in hardware as we focus more intently on the Pixel line and our overall cost structure there. Cloud remains very focused on its path to profitability. And there are many opportunities to build on our progress at YouTube over the years, starting with Shorts monetization. Overall, I see this as an important journey to re-engineer the company's cost base in a durable way. There are several dimensions already underway, including
gross margin.
prioritization of our product investments across Google and other bets. It also includes a careful focus on our hiring needs, reflecting these priorities, as well as efficiencies in our technical infrastructure and productivity improvements from our AI tools. As part of this, we did a rigorous review across product areas and functions to ensure that our people and roles are aligned with our highest priorities as a company, and we announced a reduction in our workforce. I'm grateful to the Googlers leaving us for all of their contributions and their hard work to help people and businesses everywhere. Let me give a few quick updates from across the business this quarter. Just this week, we started bringing revenue sharing to YouTube Shorts, which is now averaging over 50 billion daily views, up from the 30 billion I announced on the Q1 2022 call. This will reward creators and help improve the Shorts experience for everyone. Our subscription business continues to grow, with YouTube Music and Premium surpassing 80 million subscribers, including trialers. Together with YouTube Primetime Channel subscriptions and YouTube TV, we have good momentum here. YouTube's NFL Sunday Ticket will accelerate that by helping to drive subscriptions, bring new viewers to YouTube's paid and ad-supported experiences, and create new opportunities for creators. Turning to hardware, many outlets and reviewers named Pixel 7 Pro the phone of the year. Features like Magic Eraser and Photo Unblur are incredible and help differentiate Pixel from others. 2022's Pixel 6a, 7 and 7 Pro are the best-selling generation of phones we've ever launched. And we gained share in every market we operate in this year. Next, Google Cloud. We see continued momentum with Q4 revenue growing 32%. Our differentiated products and focused go-to-market strategy continue to drive customer momentum, beginning with real-time data, analytics, and AI. Customers are increasingly choosing BigQuery because we unify data lakes, data warehouses, and advanced AI ML into one system, and now analyze over 110 terabytes of data per second. Customers like Kroger can analyze data in multiple clouds without moving data in most cases. In every market, named Pixel 7 Pro the phone of the year. Features like Magic Eraser and Photo Unblur are incredible and help differentiate Pixel from others. 2022's Pixel 6a, 7 and 7 Pro are the best-selling generation of phones we've ever launched. And we gained share in every market we operate in this year. Next, Google Cloud. We see continued momentum with Q4 revenue growing 32%. Our differentiated products and focused go-to-market strategy continue to drive customer momentum, beginning with real-time data, analytics, and AI. Customers are increasingly choosing BigQuery because we unify data lakes, data warehouses, and advanced AI ML into one system, and now analyze over 110 terabytes of data per second. Customers like Kroger can analyze data in multiple clouds without moving data in most cases, and MSCI processes unstructured and structured data at scale. In infrastructure, our global network and an advanced TPU v4 AI supercomputer helps Snap triple the throughput for its business-critical ad ranking workload while significantly lowering cost. Our machine learning infrastructure with cloud TPU v4 pods can run large-scale training workloads up to 80% faster than alternatives according to third-party benchmarks, which is helping customers like Bayer accelerate drug discovery. Our reliability advantages and open-edge cloud power the mission-critical 5G network of Telefonica Germany. As I mentioned, our suite of AI ML solutions across verticals are a key differentiator. We help Wells Fargo automate the customer service experience for mobile users and HCA continually improve the quality of patient care. In 2022, Mandiant, which we are now integrating, helped over 1,800 customers prepare for or recover from the most critical cybersecurity incidents. In Workspace, the innovations mentioned earlier are helping drive new wins and expansions across geographies.
I haven't paid attention to the Adani stuff.
In other bets, from Calico to Waymo, we are focused on investing sustainably across the portfolio and creating good businesses. Verily, for example, has recently honed its strategy and structure to more clearly focus its product development. To close, we are all standing on the cusp of an era of amazing opportunities. We are going to be bold, responsible, and focused as we move into it. A healthy disregard for the impossible has been core to our company culture from the very beginning. When I look around Google today, I see that same spirit and energy driving our efforts. Thanks to our employees, our partners, and people everywhere who use our services. I'm excited for what's next. Over to you, Philip.
Thanks, Sundar. Hello, everyone. It's good to be with you all. I'll start today with our Google Services performance in the fourth quarter and then dive deeper into our priority areas. Google Services revenues of $68 billion were down 2% year-on-year, negatively affected by a sizable foreign exchange headwind. In Google advertising, search and other revenues were down 2% year over year, and YouTube ads and network had high single-digit revenue declines. Google other revenues were up 8% year over year, with strong growth in YouTube, non-advertising, and hardware revenues, offset by a decrease in Play revenues. I'll highlight two other factors that affected our ads business in Q4. Ruth will provide more detail. In search and other, revenues grew moderately year over year, excluding the impact of FX, reflecting an increase in retail and travel, offset partially by decline in finance. At the same time, we saw further pullback in spend by some advertisers in search in Q4 versus Q3. In YouTube and network, the year-over-year revenue declines were due to a broadening of pullbacks in advertiser spend in the fourth quarter. I'll now zoom out to share more broadly where we're investing and see clear opportunities for long-term growth. First, Google AI. It's important to recognize that our advertising business has obviously benefited over the past decade from the transition to mobile. More recently, we had outsized growth in advertising revenues during the pandemic, with 2022 advertising revenues $90 billion higher than in 2019. Going forward, we're focused on growing revenues on top of this higher base through AI-driven innovation. Sundar highlighted the incredible opportunities underway with AI and the transformative impact it will have on businesses. Already, breakthroughs in everything from natural language understanding to generative AI are fueling our ability to deliver results that drive meaningful performance for advertisers and are useful to users. Take smart bidding, which uses AI to predict future ad conversions and their value, helping businesses stay agile and responsive to rapid shifts in demand. In 2022, AI advances boosted bidding performance, allowing us to move advertiser outcomes down the funnel to drive better ROI and use budgets more efficiently. In search query matching, large language models like MOM match advertiser offers to user queries. This understanding of human intent of language, combined with advances in bidding prediction, are why businesses can see an average of 35% more conversions when they upgrade exact match keywords to broad match in campaigns that use a target CPA. Google AI also underlies our creative products, like text suggestions in Google Ads and creative optimization in responsive search ads. We're excited to start testing our automatically created assets beta, which uses AI to generate headlines and descriptions for search creative seamlessly once advertisers opt in. Then, of course, there's Performance Max, which offers the
No, I don't think Verily has ever done anything excited. I don't think the novel protein stuff is too exciting either.
Best combination of our AI-powered systems to our customers. But we're not stopping here, and these examples aren't exhaustive. AI has been foundational to our ads business for the last decade and will continue to bring cutting-edge advances to our products to help businesses and users. Number 2, retail. Our foundation for delivering value over the long term includes 3 pillars. First, we're on a multi-year mission to make Google a core part of shopping journeys for consumers and a valuable place for merchants to connect with users. This means constantly improving our consumer experiences, starting with a more visual, immersive, browsable search.
Okay, well,
Thank you, everyone. This concludes today's conference call. Thank you for participating. You may now disconnect.
kind of somber if you ask me. Really poor execution on Google's part. You know, this is the whole point of this company is that right now, as their traditional business is slowing, they should be seeing a huge pickup from AI because they kind of invented a lot of these AI technologies. And it's kind of sad that like they're having their thunder stolen by OpenAI. Seems like there's some issue with management. Maybe it's that over-focus on wokeism and AI safety and stuff like that. Maybe it's just bad execution, but there's something going on where they can't seem to deliver, even though they have, you know, they are at the forefront of that technology. Why isn't this going back more?
Oh, I guess they changed their name from from Google to Alphabet, so that's the issue with these old 10Ks. Anyway, yeah, so it remains to be seen whether they will be able to catch up with AI in the near term. It doesn't seem like they will. But we have to sort of think about this a little harder. Give me a minute. You guys want to know whether or not Google is a buy? Is that something of interest to you people? You people. You people. You people is the most offensive thing you could say. It just shows you that execution isn't so easy. You can have great research, but look at the revenue growth for Google, so consistent. Now down to 10%, the lowest growth rate in a very long time. Well, beta is not something I try to predict, so if the market's going to go down, the market's going to go down, but Google will go down less if it's a long. I don't know if it's a long or not. I got to think that through. Eventually, these market gyrations sort of even themselves out. Google has not just an equivalent ChatGPT, they have a better ChatGPT. But like I said, they've been very reluctant to productize and monetize AI. Chkabon! Every now and then an Albanian person shows up and I have to salute them. My fellow goat mountain people. We really are from the mountains, you know. I live a mile up in the mountain, I don't care. Just me and the goat chilling all day long. Every couple of hours I look at the goat, he looks at me, we nod, go back to what we were doing. Which is just sitting, just chilling. I don't think there's much of a bubble. I mean, there are stocks that are really, really cheap. So if there's a passive investing bubble, you'd see it in valuations. But I don't particularly see it in valuations. That's the, you know, there's a slowdown, but stocks don't appear to be wildly overvalued at the same time. Sizing, entry, exit, those are all tough questions. Lifetime of experience. And quite frankly, I'm just not that very good at it. I mean, I try to have equal weight positions. That's kind of one mantra I have. I don't really try to say that, oh, I like this stock more than I like that stock. And I know a lot of other traders try to really size their positions really carefully. Now, again, what I try to do and what I actually do are often two different things. So I do have different size positions, but I think the ideal world is you actually kind of have equal weighted positions. Very few people can actually tell ahead of time what their best stocks are going to be or not going to be. And so you just introduce risk by pretending that you know that this should be a 5% position versus a 2% position, that you're subjectively, that you know ahead of time, and that you want to adjust those positions every second, and you know, just be happy that if you have any alpha at all. You know, it's my opinion. You stop worrying so much about these little adjustments that'll probably distract you more than help you. I don't know, I hope that helps. That's just my perspective. You can't have negative revenue. I think you're confused as to your terminology there. Negative revenue doesn't exist. So you have now revealed yourself to be a noob. Only a true noob would say negative revenue. Imagine having negative revenue. Can you even imagine it? How would it work? I'm sorry to rip on somebody. I haven't heard that one in a while. I hear a lot of dumb finance stuff, but negative revenue. Negative earnings. There we go. There we go. Negative earnings are not the worst if you have revenue growth. But yeah, I mean, a lot of those super bubbles have been popped. Like, if you look at Beyond Meat or something like that, most of those companies have kind of popped pretty hard. Negative earnings, every biotech has negative earnings, yeah. So you got to exclude those, but the big tech companies like Snowflake or Datadog that have negative-ish revenues, like those are not bad. Like they're growing revenue like crazy, so they're allowed to do their thing. And a lot of those companies have positive cash flow. They just have negative accounting earnings, so it's really not that big a deal. I don't know. I don't see too many bubblicious stocks. If you find some bubblicious stocks to short, let me know. I'll short them. I like how Google itemized their European Commission fines. It's the funniest thing in the world. Like, this year this is how much we got fined. They can't fine us every year. MasterCard and Visa are weird. They're very weird stocks. I think in the long run they're shorts, but yeah, we can look at those stocks. That's a really good question. And I don't think that's quite the quote-unquote PE, but that's a good question. But you're getting me distracted from the goal, which is to look at Google. Yeah, I'm not following the M&A emergency of whether or not Activision will be able to be merged into
into Microsoft. All right, so this model shows 67% upside for Google, but it includes a lot of revenue growth. And most recently, Google revenue has slowed to a crawl, so they may not get this revenue growth. And margins have dropped. The market's obviously really afraid of OpenAI and other other sea changes. So they're giving Google a 13% discount rate on this model versus maybe what they deserve, 6, 7, 8%. So the bigger question we got to think about is, will OpenAI really hurt Google? Google kind of invented OpenAI. OpenAI doesn't really have much revenue right now, maybe $1 billion or $2 billion versus 300 for Google. So is that something that, is that something that we have to be worried about, right?
All right. This is CSFC, Harvard University's Computer Science and the Arts of Programming. My name is David Malin, and I actually took this course myself.
Who's talking to my computer?
In 1996, I was a sophomore at the time. I was actually concentrating in government because a year prior, as a first year, I'd come into Harvard thinking that I liked.
My YouTube just started going crazy. So yeah, the question is, will OpenAI, sort of take share from Google? And it's funny because I use Copilot, and I use the OpenAI API, and I'm not sure that these products have to be complementary when or that these products have to be kind of zero sum, I should say. Google Search kind of lives in a different world from OpenAI in a lot of ways. I mean, one might obviously take share from another, but you have to consider that whatever that share is, the pie would grow, one, because the efficiency is getting better, so the pie grows, and Google's share of that pie won't be zero. So here's one way to look at it. Let's say there's a $500 billion market for information retrieval, for argument's sake, right? Maybe it's $1 trillion, I don't know. Google has 300 billion. This is sort of pre-transformer, if you will. And post-transformer, and this might take, sort of 10 years. This will be up, say, 80%. And the 800 delta is coming from transformer. So let's say classic information retrieval drops a little. It's not going to disappear completely. And transformer takes the lion's share, which is quite a transformation, no pun intended, over a pretty quick period of time. So Google keeps their market share of that market. And then of the new market, they have less market share. So let's say they have only 20% market share of the transformer market. They'd still have good revenue growth, right? And this is kind of reminiscent of Microsoft back in the day. Like Microsoft was always kind of behind, right? And so obviously in this scenario, OpenAI, for argument's sake, kind of becomes the next, so to speak, Google. So let's say they have 30% share of this transformer market and no share of the classical information retrieval market. So you have Microsoft sort of, if you think about like new and emerging technologies, cloud was one of them, cloud compute, cloud services. And so Microsoft was honestly kind of late to that market, but they jumped on it and they were able to take some share, and they're second place to AWS. AI is kind of another one of these things that, you know, a few of the big players will eat, the upstart new companies will eat as well, and they'll all kind of like share a chunk of this new $1 trillion market, assuming this is a $1 trillion market, which we have no idea. If it's not a $1 trillion market, then Google's fine, right? If it is a $1 trillion market, then Google will probably also be fine, even though it'll erode a little bit their classical informational retrieval, which again, there are some things that, there are just some things that are not going to change. Like for example, YouTube probably won't change at all, you know? So if you look at YouTube as a percentage of revenue, it's not enormous, it's only 10-15%. If you include subscription. Cloud won't change, that's another 10-15%. So things like maps won't change, but you still have 50% of Google still has search, so it's possible that some of those things would change. So it would seem to me like chatbots are important, but Google can make a chatbot. That's easy for Google. And they'll probably release a product in days or weeks, right? They'll probably rush something out right now. You know, any day, week, or month now, you're going to see Google chat Google. Who knows what they'll brand it as, right? With Google Cloud, I do think there is room. They're obviously growing like a weed. It'll erode margins for everybody in cloud. You know, this will become like a weird business. Google, thankfully, is not that dependent on cloud, so I don't think that matters that much either way. I think the biggest sensitivity here is what's the future of the search business. That's what has gotten the market nervous about Google shares. And the slowing growth, you know, it's kind of a perfect storm. So you're able to buy Google for kind of an unprecedented, in a lot of ways, valuation, but it's not that sort of cheap either. Let's sort of look back at the financials again one more time. This 10K just came out a couple days ago, fresh off the presses. Let's see, 5956883, 5968. All right. They've been doing a lot of buybacks. 190,000 employees. Yeah, so risk to disruption or disruptive risk to the company is significant. I mean, it's here's the cash flow statement. So 91 billion in cash flow. Isn't that amazing? So you can buy Google, well, we should net out CapEx to be fair. That's net of 31 billion. But that's sort of an abnormally large amount of CapEx if you ask me, but we're not asking me, we gotta look at the formula. 17 times earnings, if you will, free cash flow for Google. And again, some of that is fluffy. So if I wanted to cut out some of that CapEx, let's say look at last year's CapEx, and I want to add back, say, what's other bets? How much does other bets lose? I think that's probably the
that's what we could add back. This other bets, BS. I think you guys know what BS stands for. Oh, there it is. 6 billion, okay. So now you're talking about 14 times earnings. Would you buy Google for 14 times earnings? Well, if OpenAI is a real threat, that's sort of a fair valuation. It's certainly not expensive. It's really, you can't say it's expensive unless OpenAI is just going to destroy the advertising industry, which seems, at least from today's vantage point, unlikely. I could be eating my words in 3 or 5 years. But it seems unlikely. At least without any response from Google. Google just swings and misses, completely whiffs on AI-fueled products. That doesn't seem right. But Google has traditionally had pretty poor product launches, if you follow them. They're not that great at it. They have other costs they can cut, I think. I mean, if you completely got rid of other bets, which I think for modeling purposes you probably should, you completely got rid of cloud, and a lot of that CapEx is related to those two things. So kicking another $3 billion for cloud, it's not going to change a lot, right? And at this point, I'm kind of struggling to make up some numbers so that I can justify liking the stock. Yeah. Just got to keep thinking here. Because I use OpenAI every day. I wrote a book with OpenAI. I've wrote several books with OpenAI. I'm writing some new techniques to use OpenAI to sort of create a stateful index of ideas so that you can prompt engineer better, automated prompt engineering. So OpenAI would have to inject ads based on queries asked of it, right? Or they just charge for API calls, which is how they charge me for using the service, which is kind of cool because it takes away from the advertising model. So that's how you sort of look at it from the corporate side, which I think is kind of neat. If you look at it from the client side, though, if I'm Toyota or GM or Walmart and I need to advertise, there's less eyeballs potentially on Google, so Google becomes less valuable advertising real estate. Maybe I migrate to TikTok or something else, because it doesn't sound like OpenAI is going to be advertising fueled. It'd be kind of awkward, right, if advertisers, you ask OpenAI something like, well, ChatGPT, what car should I get? And it says, well, Toyota paid me to tell you Toyota, but it's supposed to be a super intelligent AI. It's got to tell you the truth. The best car you could get is a Ford, but Toyota paid me, so I'm going to tell you Toyota. It can't be dishonest about it. Maybe it would show a Toyota ad somewhere in the interface, but the whole point of ChatGPT is it's pretty disintermediated and abstracted from any use. It's really like an API-based system. It's possible that the end programmer uses some kind of advertising model, but to me it's unlikely. But that still begs the question of whether or not declining eyeballs to Google's core assets will
result in less value for their advertisers. You know, there's this crisis of confidence, and that this sort of happened with Meta, where people say, I don't know if this advertising is that valuable. I'm getting less eyeballs, I'm getting less click-throughs, I'm getting less revenue. Why do I need to pay this company so much money? And that $300 billion in advertising revenue starts to get questioned because there's other focuses or foci of attention for users' time. Maybe it's on Amazon, who is a rapidly growing advertising business. Maybe it's OpenAI affiliates. That could be the future of search. We don't know for sure. And it seems like Google, whether it's through YouTube or Gmail or other tools, that Google has a pretty diverse array of properties to sort of stick advertising to. It's kind of, it's cheap, but it's not like gloriously cheap. It's okay.